What I find important is that you do what you like, because you can only excel in what you are talented for and what you like. And so if you want to be successful in general, not determined by making money or a hierarchical level in an organization, just do what your talent is and be successful in that.
Ralph, welcome to Live Long and Prosper. Thank you for joining us.
You're welcome.
You're back in Singapore after how long?
Last time I was here was like 2 years ago, but happy to be back.
But I know you've been back and forth to Singapore many, many times.
Yeah, so over my banking career, at least anywhere between 20 and 30 times. I see a change every time I come here, right? And maybe if you live here, you don't see how quickly it changes. But if you come back here almost like every 6 months, then there's always something new. And so things are developing, things are happening in Singapore.
Ralph, and I think people in finance and banking all know you very, very well. But for the others who may not have heard about you, could you talk a little bit about your career and the journey that you've been on?
Yeah, so I've been a long time with ING, 29 years with ING, of which the last 7 years as the CEO of ING. And then I made the switch to run UBS. So I've served as the CEO of UBS for just short of 3 years. So I think certainly the last 10 years I've been very much focused on what technology does to the financial world and banking specifically. So that's a little bit what I've been up to.
And now, thank you so much for joining us as an external advisor, and for the last many months that you've been advising me personally. I really in the podcast want to get into your life, but it'd be a waste not to ask you some questions about the wealth management industry, given your experience. So can you talk a little bit about how you see the journey of wealth over the last 20 or 30 years and where you see it heading towards?
Yeah, so I think that the journey of wealth has gone from, personal advice around lifestyle to personal advice in terms of investment to basically now where we're ending up is how can you use technology in order to really make that advice personal, right? And if you take a look at the journey in banking as to what technology has done to banking, back in the 80s, technology being introduced on the trading floors, the stock exchanges disappeared, from crowded places with shouting people to completely empty areas where basically nobody was there anymore. But all the execution basically was done through computers, and there at a certain moment it was all about the speed of execution. It was all about the pricing as well, the bandwidth for the execution. So it was all about execution, and that was then taken also into what we would refer to as transaction banking and payments, also much more execution oriented. That was all when we were talking about, automation, and then digitalization came in, which was a completely different approach to technology in the financial world. And I've always seen that, automation and digitalization and everything that can be done in a non-material world would disrupt the banking world, because banks don't deal with material product, right? So banks have always been on the receiving end, if not the disrupting end of what technology can do. And with the digital technology came a completely different user experience, a direct-to-customer experience, where customers could actually experience and do transactions themselves, right? First on the internet and thereafter on the smartphone. Then came the gathering of information, the dashboarding. How can you have insight in your own personal situation? Which was already a big step, right? Because we all have our stuff with different banks and different insurance companies. And how can you gather all that together so that you have one overview. But it's still only information. It's not intelligence, it's information, right? To what is now basically the next step, whereas translating your preference, your style, your need into basically a digital profile using AI. And on the other side, the product side, combining then whatever is out there in terms of product and solutions and matching that with your personal need. And that is a big step. Up to now, these were all kind of almost like mechanical steps, like bigger steps that were standard for everyone, even with the robo-advice, which was still kind of model portfolio, to now the final step being completely personalized from what is on offer from a product perspective and what is your need and how do we match them. And that's where AI basically brings this revolution in the financial world.
I've heard you using this phrase segment of one. Do you want to talk a little bit about
No,
what you
this
mean
is
by that?
exactly what is happening, right? So the final step that we were missing in all of this was, so how do we bring these new services to a client that the client feels that this is a true personal service, a personalized service, not only in terms of the solution, but also in how it is advised, right? And so in marketing terms, we were always looking at, so how can we kind of bring segments closer to the offering and match it better? But we were always dealing with tiers of wealth or behavioral segmentation, like people want to do more themselves or people want to be more serviced, or in terms of risk appetite, we were segmenting in terms of risk appetite. But you always had to choose one of the three. It was very difficult to choose a combination and then have the right product, right? But what we see now with AI, where on one side we observe behavior, we know preference, and we understand risk appetite. And we take all the solutions in terms of what people would want to invest in, whether it is public markets, whether it's banking products, whether it is private markets products. You can actually create the perfect offering for one specific client that matches exactly the need, the preference, and the appetite. And that's what I call the segment of one. We've come there with Arta.
True personalization at scale. Very,
Yes.
very, very exciting. Ralph, on that thread, as we've been talking over the last number of months, you've talked about how your theory of how technology spreads around the world, and you've been advising us on that. Could you talk a little bit about how you've seen technology sort of spread through the world in the financial
exactly.
world?
I've always found it very funny actually to observe that a lot of the technology finds its origin in Silicon Valley, right? So there's a lot of smart people together. They do open innovation. They don't mind. They don't sit on their ideas. They spread ideas, but they try to make businesses out of ideas. And some of the ideas actually find their foundation there and develop into something like Google or Apple and some of those. But in the financial world, it never led to something maybe apart from PayPal, right? But a lot of the additional technology that was developed there found a successful application and implementation in Asia first. So it went from the West Coast to Asia, where you have a younger population, digital natives as well, maybe also the different levels of regulation that would allow experimentation with new technology and see what that could bring to the financial world. And then from being applied in Asia, it would generally quickly go into Europe as well, where you have, certainly from the Nordics further to the south, you have this trend that people deal increasingly with digital business models, not only in banking, and therefore it found its way into that as well. Then to, in the end, arrive on the east coast of the US, right? So rather than that, they would make the connection within the same country from the west to the east coast. It actually travels around the world for it to arrive on the East Coast in the financial world. That's what I found very funny.
It's interesting. Let's see if Arta takes the same path. We started in the
Yeah,
US.
exactly.
We have a team in the Silicon Valley. Now we're opening up in Singapore and international, and then hopefully around the world, and eventually we'll get all over. Ralph, let's switch tracks a little bit. I really want to, have our audience learn a lot about your career and how you've made decisions in life. And you've made some pretty radical shifts in your career. You were at ING for 29 years.
Yeah.
And then you left, moved to Zurich, to a Swiss private bank, as non-digital as ING was digital. Could you talk a little bit about, how you made that decision? What drove that decision? How did you evaluate between, your work ambitions, your personal ambitions, money, all of these aspects?
Yeah, so after 7 years being the CEO of ING and basically accelerating ING onto the digital direction, right? So moving from ING Direct into ING and ING Digital, moving from the large screen banking, internet banking, to smartphone banking. That in itself sounded very easy, but it was a complete different bank, because large screen banking you do, and we all did, maybe twice a month. We would sit behind the monitor and we would do our payments, and whatever would have been left on the account we would transfer to a savings account. Small screen banking is what you do while waiting for the bus, right? If you have a minute, you check your app and you do things instantly. A couple of times a day sometimes. And that expectation that consumers have holding the handheld versus the desktop is a complete different expectation. Of course, that found its first application in payments, transferring to your savings account, making some more investments, right? So that's where you found that. When we went on that journey with ING, and we also had to completely change the way of working to agile. We had to completely change our technology stack as well. We had to change our culture as well. We built a campus around that also to ensure that we could attract the right talent that would, found that very attractive. But after 7 years as CEO, UBS basically also asked me to come over and see what technology could bring to what UBS was doing. Now, honestly, I think UBS was already quite far in applying technology, specifically also in the trading business, right? Where some of the traders were they were writing the algorithms themselves. They would be semi-engineers, right, already. So some of the concepts of how technology differentiates your offering and differentiates your user experience, and some of the ways of working in order to be successful in that already found their way into UBS. But what we tried with my team at that moment in time is how can we enlarge this movement, and that's what we did. And that's what I was doing for the last 2.5 years as the CEO of UBS.
And was that a big change for you personally, like going from bank where you had basically kind of grown up in many ways to a completely different culture, different organization? How do you adapt?
Yeah, so at first, I think the big change in itself was that I joined UBS in COVID time, when basically everybody needed to work from home. Nobody was allowed to travel. So my first 12 to 15 months, I was only able to work via the computer, really, right? So through the screen. So that in itself was something that we all kind of had to get used to. But honestly, I think the team did that really well. And then for me, the big change was that UBS in itself was a completely different bank from ING, right? So it has a different business. And I always found it difficult to look at a further step in my career after ING if the bank was too much a competitor to ING. because you can't be credible as a CEO representing the same kind of business model. And UBS was a completely different bank. I loved it. I think they're very professional. They have a very good culture. They were very welcoming as well as to some of the changes that we wanted to bring as a top team. So yeah, really liked it.
That's it's fascinating. You talked a little bit about how the culture that you brought about at ING, and you changed the bank, and UBS, you came into this culture. I think in the past, when you've talked a lot about all these very kind of interesting and crazy things that ING did to break through. I'd love for you to give a few examples for people in the audience so they can hear some of the stories and inspiring stories you've given me.
Yeah, well, I mean, so basically, if you want to disrupt a business, right, you gotta first have the appetite to do that, because ING was an incumbent, but also a disruptor, right? So, and in that, you have to be sure that you want to disrupt part of your own business, right? So, which not a lot of incumbents dare to do, right? So that's an attitude in itself. And that brings discipline as to what that, and conviction as to that you feel this is the only way to survive, right? And so that's one. Second, bankers like to make things complex. It's just how we are, right? So, and where in the past people would basically be happy with introducing a new product with a new bells and whistle, or a bit of a change condition here or whatsoever, and they would call it a new product, they would have something new to sell. But in itself, that only creates more complexity and legacy. So on the journey of ING Direct and thereafter ING Digital, we always had a culture of making things simple. Making things simple in terms of the product, making things simple in terms of the user experience. And for us, victory was much more celebrated with being able to decrease the number of swipes than with the introduction of a new product, right? But it takes a completely different, almost a non-banking culture, right? Then on top of that, if you want to be a challenger in the market, and you want to do that in a what we would call a business to consumer model, you need to have a brand that people recognize. And clearly ING started its disruptors, and ING Direct started its disruptors in markets in which we were not known. But it's incredibly expensive to build a brand. So you have to be creative. So you have to use what we would call guerrilla techniques in order to make sure that people start talking about you. So rather than spending a lot of money in advertising, you gotta create events and organize events that basically attract the news, and that's what we did. So in ING in the US, we had campaigns around that you could fill up your car for free within given 4 hours in that gas station or that gas station, and then people would basically line up, right? And that would cause traffic jams, and that would create news. And basically the news was necessary in order to announce our arrival, right? As to ING has this action, is free, and that's what we did. So with that, you can save a lot of marketing money, but you create a lot of word of mouth, right? And you basically establish yourself as a brand.
Yeah. And you also set up cafes, sold T-shirts in cafes.
Exactly. Yeah, so specifically, if you're a challenger, let me put it that way, there's always early adopters. And early adopters like to kind of show that they're an earlier adopter, right? So, and they basically felt that ING and banking with ING was saying something about them, right, as a lifestyle. And that's also why we developed this program for ING to become a love brand, so that basically people would sign up because it was so easy to do with it, and people would basically relate to ING as saying something about themselves. And in the days with ING Direct back then, when we were growing to a level where we felt that customers wanted to see some kind of physical representation of ING, which is only a digital bank, we started to open ING cafes. And what you could do in an ING cafe is, of course, get a cup of coffee. But what you could also get in the ING cafe was, merchandise, ING merchandise, like a mug or a t-shirt or whatsoever. And that's what people really liked. Because through the merchandise, they could show that they were banking with ING. Because otherwise, you could not show that you were banking with ING because it was only digital, right? So those are the stories that if you want to build a digital brand, you got to be very inventive, and you got to see who are your early clients, what are the characteristics of those, and how can you build on that?
That's super interesting about the brand. From ING the brand to Ralph Hammers the brand, what is your brand?
What is my brand? So I've always liked to understand what technology can do to our business, right? I don't come from the technology side. I'm a pretty old-fashioned banker from my resume perspective and how I built my career. But given the fact that ING was always focused on low-entry barrier banking in terms of how we would deal with institutions and corporates and consumers alike, we always wanted to be very clear and fair as to how we dealt with those institutions and with those clients. So the DNA has always been there that, if we can make it easier, if we can make it simpler, if we can make the experience better, we should. And technology gives all those opportunities. And so embracing technology, not just to enable what you do, but to really use it to differentiate vis-a-vis your competitors as to what you do, I think that's a bit my brand.
Absolutely. That's exactly how you've been helping us, and I really, really appreciated that. So let's get a little bit deeper into you, Ralph. How did you learn about money and investing? What was your first experience with money and like in your childhood or whenever it started?
So one of the things, and I later on, I actually started something in order to counter that as well, is that, so when I was young, I had a paper round to make money, right? And I needed the money to buy records because I was a DJ. So, and that's basically how things developed. So I needed to run my paper rounds, buy records, do a bit of DJing as well. But at that time, when you made money and you would do your paper round, you could buy maybe 1.5 single per week. So basically the value of money as to having to work 2 to 3 hours to buy one record, you feel what the value of money is, how much time you have to put into something to buy something. That's how I started to understand the concept of money. And basically at that moment, money was still very physical. So basically you had a pile of coins and you would see, okay, I've made that money and I'm now going to spend it. And now the money is gone. So those were my first steps into understanding the value of money. Some of that I've used later on when I was developing the strategy of ING, but also the development of the UBS strategy. I think you should always look at what is the flip side of your success. So at ING, the flip side of being digital is that you should also understand that there will be people who may lose the understanding of the value of money, because money now has just become a number on your app, right? And if you now make money, suddenly there is like 10 on the app. And if you go to Starbucks and you buy a cup of coffee, the 10 is gone. Mm-hmm. But it's just a 0 to a 10 and a 10 to the 0. It's on your app. So that's a completely different concept. So making sure that societies don't lose the concept of the value of money, we started the Think Forward initiative there, right? So you can also have digital techniques in order to make sure that people understand that, right? So that's what we started doing.
And how have you thought about the role of financial planning and financial strategy in your life, or have you consciously thought about it?
Well, so at first not, because and I think that people recognize that is that money is never the goal of what you do. The goal of what you do is that you want to realize something in the job that you're successful at, that you have passion for. And money is more a result, a consequence of your success than a goal in itself. So even as a banker, I was never really focused on that per se. And honestly, I was not so good at my personal finances and managing it because I never had the time, right? And I found it too complex to gather the information, et cetera, et cetera, et cetera. So, basically in the first period, it was all about savings rather than investing. And only later, I started to look at investing as well. Although, during my studies, I learned a lot about investing, right? So about all the models, the capital asset pricing model and all of that. So I knew what needed to be done in order to do intelligent investing, let me put it that way. But, I never bothered, honestly, until later. And then clearly the models that we have in the world and that we had in the world for a long time were that, you had advisors helping you manage your money, having a discussion around what is the horizon of your investment, what is your risk appetite, do you have specific preferences in terms of geographic allocation or not, and that would help you build your portfolio, so to say. But that very quickly was taken over by robo applications as well. And now even the taking stock as to what is your personal preference, and having to match a solution with a preference, that can all be done by technology now.
So what would be advice for someone who is starting on their financial journey and on the, thinking about financial planning? Let's say a millennial starting to,
Yeah, so I think that whether it has your interest or not, I would certainly try to learn as much as possible about finance. Because it's a responsibility that you carry not only for yourself and your family, but also for the next generation, really. And in that, you should take some time to understand it. The good thing is that there is a lot of technology available now to quickly understand the impact of changing your portfolio, changing your horizon. You can run scenarios to get a sense for that, right? So, and you're not dependent on necessarily advisors all the time if you are open to be more self-directed. And that in itself is a trend, right? Self-directedness, whether this is in, purchasing any good, but also in managing your finances. That's a trend that has been there for quite some time, but it's a growing trend. But it always stopped where intelligence was needed in order to translate your need into a solution. And I think that's where, also for the millennials now, it's very interesting to see that also for those finance issues, you can have actually access to, for example, Arta, that basically does that for you, right? And that takes you along in a way to set your character, so to say, with your appetite, with your preferences, and then translates that into a portfolio that you can then execute on.
Thank you. One last question, and then we'll get into some quick rapid fire. You've reached the pinnacle of your career across ING and UBS. What advice would you have for a 25-year-old who's starting along their career and looking at you and saying, how do I get to be Ralph Hammers in 25, 30 years?
Yeah, so what I find important is that you do what you like, because you can only excel in what you are talented for and what you like. And so if you want to be successful in general, not determined by making money or a hierarchical level in an organization, just do what your talent is and be successful in that. Second, I never planned my career. I always looked at, the does the next job hold something in which I can add value, but does it also hold something that I can learn? Those were the only questions I asked for any new job. It's like, is there anything in there where I think I can have an edge to add value so that I have credibility from day one? But are there also aspects through which I can learn? Because you will never stop learning. Every day I still learn, right? And today being here with you, I learn a lot from you and from your team as well. And whether you have been the CEO of large systemic banks or not, you can learn from anyone. So stay curious, want to learn, but do what you really like and what you have passion for.
Thank you, Ralph. I'm going to ask a few quick lightning round questions.
Okay.
Not a lot of thought. It's a fill in the blank, and then we'll end it. So, if you want to prosper, never underestimate the power of dash.
Technology, I guess, would be my answer. Yeah.
Okay. The 3 key ingredients for a long, fulfilling life are 1, 2, 3.
Ooh, wow. So stick by who you are. Stick to your norms and values, because you will not be able to develop if you are too far away from who you are. So it just doesn't last. So I think that's really important.
Stick to who you are, stick to your values, and continue on the path. Okay, last question. The simple joy that adds years to my life is?
My children. Yeah, so it's a pretty standard answer, I guess, but it is true.
It is true.
So it's true, right? So from the day they were born and how they've developed and how you can support them and what they bring to you as well, both in concerns as well as joy, right? So it keeps you alive. It keeps you on your toes as to what you need to learn and how you basically have to act. So, and they also keep you grounded, right? So, because they're your children, you're just the father, right? Whatever people think you are out there, in the end, you're just the father, right? So it's like, but it's a great honor to be a father. So it's certainly my children.
Absolutely. That's a beautiful answer. Thank you so much, Ralph. Thanks for being on Live Long and Prosper.